Go back.
It's slow to me.
Yeah.
It's about to go live now. All right. Good morning, everybody. It's that time again. Saturday morning, Crypto Talk, Bitcoin. Brandon here. After a day off, kind of. Welcome. Hope you're still enjoying your Thanksgiving holiday weekend. Go ahead and type in the chat box where you're listening in from. I see we have Bethany Gibbs from Seattle, Brandon Vasquez, Shauna Ross, Jamar Lopes, Skirtala and Muhammad, Darnell Abram from the OKC, Omar Jarrett from Connecticut. Welcome, everybody. As a disclaimer, I'm not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to move into. Brenda's from the OKC as well, huh? Robert Wood from Baltimore. Anissa from New Jersey. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Make a decision Take action and stay focused. Do not get distracted. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. So let's go ahead and get started today. We've got a couple of articles that are interesting that we're going to talk about. I'm going to lead with this interesting one about China. Oh, I got to turn on screen share. All right, we are going to talk about China. Why? Why is China even important? I always cover geopolitical news because it is not just about America. The entire world is connected now. What happens in other places will affect us here at home. So we got to make sure we're on top of what's going on over there so that we can make intelligent decisions. And what I mean by that, I mean personal decisions. The government's going to do what the government's going to do. You know, we can't control that besides voting. But what we can do is control our own household, our own finances, and make sure that we are prepared. I love the quote by Jim Rohn when he was on his quest to become an entrepreneur. He said that my goal is to build a financial wall around my family so high that nothing foreign or domestic can penetrate. Nothing. That's my goal as well. So what's going on in China? I've been waiting for this. If anybody that's been listening to me for over a year, I've been saying this for a very long time. How the U.S. economy can collapse. What will be the trigger zones? What are the signs to watch for? And earlier this year, we saw Russia dumped more than 90% of their U.S. Treasuries and then started hoarding gold. U.S. Treasuries just means the debt. They bought our debt. Donald Trump is making moves for us to go back to the gold standard and get rid of the Federal Reserve. No president since Kennedy has even attempted to do that, even commented on that. All presidents since Kennedy have always deflected that question, Republican and Democrat. We see Russia and Iran and North Korea moving into the crypto space to avoid U.S. sanctions. Being able to buy and sell and move oil away from the petrodollar. But the biggest sign to look for is the nation that owns the most U.S. debt, China. If China decides to start dumping their debt that they bought of us, there's nothing left to prop up the U.S. economy. And that triggers a massive recession. The government's response to this will be to print more money. That's what will cause the recession. You just can't print more money out of thin air just because you want to. Well, they will. They will. So here's the trigger I've been looking for. China just dumped the biggest load of U.S. Treasuries in 8 months. I think, what does that have to do with cryptocurrency? A whole lot, if you're looking to save your wealth. In September, China's share of U.S. Treasury holdings had the highest decline since January as ongoing trade tensions with Washington
forced the world's biggest economy to take measures to stabilize its national currency. That's the thing that makes me nervous there. They feel they were forced. Politics aside, for every action, there is an equal and opposite reaction. If our government is making a decision to go on this trade tariffs war, there's going to be consequences. Here's one of those consequences. Still the biggest foreign holder of the U.S. foreign debt. It's almost like shooting the mouth that's feeding you. China slashed its share by nearly $14 billion, with the country's holdings falling to $1.15 trillion from nearly $1.17 trillion. Now, this isn't that big of a number. Russia, I think theirs was 84 billion, but that was more than 80% of Russia's holding. So China moving 14 billion is just a fraction of 1.15 trillion. But it is a move. It's like everybody that's watching the Satoshi Nakamoto Bitcoin wallet that's got 1 million Bitcoins in it. If only one Bitcoin were to move from that wallet, it will cause shockwaves. You don't need to move 100,000. Just one Bitcoin will cause shockwaves. So yeah, 14 billion is going to get some notice. The fall marks the fourth straight month of declines. China is followed by Japan, whose share of U.S. Treasuries fell to 1.03 trillion, the lowest since October 2011. Washington has accelerated the Treasury's issuance to avoid potential growth in the federal deficit due to the massive tax cut pushed by President Donald Trump, as well the federal spending deal approved by the government in February. Okay, so we've got like almost a perfect storm taking place here. We've got the tax cut. We've got more spending. And we've got a trade tariff war with China. Those three things that our government has done, is going to have consequences. Neither good or bad, it doesn't matter. Chinese purchases of U.S. state debt have been decreasing over recent months. The latest drop comes on top of the escalating trade conflict between Beijing and Washington over trade imbalance, market access, and alleged stealing of U.S. technology secrets by Chinese corporations. See, on that aspect, I'm like, kick them out. Get them corporations out of America. I'm an American. I will always be America first. That doesn't mean I need to be America only. We have to work with these people. So far, the U.S. has imposed tariffs on $200 billion of Chinese goods, and Beijing retaliated with tariffs of $60 billion of U.S. goods and stopped buying American crude. Every action, there's an equal and opposite reaction. The parties are reportedly set to resume trade talks at the G20 meeting of the world's developed economies that will begin in Argentina on November 30th. So far, Beijing has presented a list of possible concessions. On Friday, the U.S. president said he would leave out 4 or 5 of the big items the U.S. wants. China wants to make a deal. They sent a list of things they are willing to do, which is a large list, and it is just not acceptable to me yet. But at some point, I think that we are doing extremely well with respect to China. Now, China is hurting more than the U.S. is on these trade tariffs. But that doesn't mean that we're not going to get, a black eye as well. And that means you're going to have oil prices may go up. You might have businesses that may go out of business, or people that are losing their jobs because of the tariffs. They call that collateral damage. Whether you agree with it or not is irrelevant. I only deal with the facts, and this is what's taking place right now. And we have to react to the facts, which means we got to get our crypto portfolios up. We don't know how this is going to affect you on a micro level. All right, next article up. Amazon survived an asset bubble. Bitcoin will too. And those of you that's listening, please make sure you hit the thumbs up button, you subscribe, and you hit the little bell so that you are getting an update whenever I go live. So let me put this link in the chat box. And let's check the market. Let's see what's going on today. First thing I do is I look at the top numbers. Market cap at $137 billion. That's amazing to me. I haven't seen it like this since before last year. Bitcoin dominance is at 53.9%, so it's raised. What that's telling me is there's been some money put back into the market, but it looks like it went a little bit towards Bitcoin, because Bitcoin now is up 0.1% since I saw it last. Bitcoin's at 42.65. It's down negative 6% since 0.6% since 24 hours. Ripple, Ethereum is up. The market looks flat as of right now. Tether is still bouncing around all over the freaking place. So across the board, the market looks flat. Let's see, top performers: Nexo, Quark Chain, Bitcoin Gold, Bitcoin Diamond. Dash is in the green. Neo, IOTA. What about the worst performers? Metaverse, Monacoin, ARC, Mithril, Tezos. It's pretty much flattened out right now for the last 24 hours. So is it because of Thanksgiving? But that's only in the United States. So we'll see what happens over the next couple of days. Go to Amazon. For the co-founder and partner of cryptocurrency firm Crypto Oracle, Lou Kerner, patience is key when it comes to investing in Bitcoin. I agree. Speaking to CNBC, Kerner said Bitcoin investors should take comfort in the example of tech giant Amazon, which lost significant value when the dot-com bubble burst, but has now emerged as the world's largest online retailer by market capitalization. If you go back to the internet bubble, which is what a lot of us in crypto look at for direction, Amazon, arguably one of the greatest companies in the history of mankind. Imagine that. Just think about that for a second. I did a Facebook Live yesterday, going into dream mode about the future. Amazon is a result of the internet explosion. And 20 years later, Amazon is one of the greatest companies in the history of mankind. Blockchain is the internet on steroids. The companies that are generated because of the blockchain are going to be bigger than Amazon. At this point in time in history, you are positioned to be able to invest in these companies before they explode. The trick is trying to find the next Amazon. That's why I go to blockchain expos and summits and I read. There's that key word there. I read so that I can spot potentials that I can invest in. Most of them are not going to be, and I'll lose money investing in those. But some of them will, and I'll make far more money in those. I'm willing to take that risk. Nobody knew Amazon was going to be what Amazon is. Nobody knew Netflix was going to be what Netflix is. If you were a betting man, you would have bet on Blockbuster, not Netflix. So if you go back to the internet bubble, which is what a lot of us look in crypto at for direction, Amazon, arguably one of the greatest companies in the history of mankind, was down over 95% over 2 years. Kerner said in an interview with the Business News Channel. Did you hear that? It was down 95% for 2 years. All the media at that time said Amazon is dead. It is another internet hype. Never going to go anywhere. According to Kerner, investing in Bitcoin and other cryptocurrencies requires one to have the stomach for handling volatility. I agree. You cannot be emotional in this space when it comes to money. You're in the wrong game. The current market weaknesses of crypto, per Kerner, can be attributed to the fact that digital assets lack underlying value other than confidence. In Kerner's view, the bearish sentiment will, however, pass as the case for Bitcoin as a store of value takes hold. I think it's a store of value. I think it's the greatest store of value ever created. It should surpass gold over time. It won't happen overnight. With the market cap of Bitcoin currently under $80 billion at current prices, the flagship cryptocurrency would have to appreciate more than 100-fold to reach gold's status. In his own words, much of the faith Kerner has in Bitcoin can be attributed to a law coined by Roy Amara, a professor at Stanford University, which states that in the short term, the impact of transformative technology is overestimated, while in the long term, the impact is underestimated. Oh, wow. That was powerful right there. I got to read that one more time for it to sink in for me. In his own words, much of the faith Kerner has in Bitcoin can be attributed to a law coined by Roy Amara, a professor at Stanford University, which states that in the short term, the impact of transformative technology is overestimated, while in the long term, the impact is underestimated. That's exactly how the dot-com era was. If you go back to the 90s, anybody that had any computer basic skills to create a website could come up with any crazy idea that had absolutely no merit, no real world application, just an idea on paper and a website that looked pretty. You'd have one of the big Fortune 500 companies paying you $50 million to buy your idea. Hyped it all up. That's what I see at these blockchain expos. I'm curious when I go next week to Santa Clara to see the difference. Because when I was in London at the last one, this is my very first event, right? I was so excited. I'm in another country. I'm going to learn more about crypto and blockchain. I'm going to see all the latest and greatest ideas. I go in there. First thing I realized is that 50% of the room weren't even people from London. That didn't faze me too much. I'm like, wow, people flew in here from all over the world. But then I started listening to the speakers. And the speakers, if you know how these things work, they're speakers because their company probably is a promoter of the event, which meant they spend a whole lot of money. Therefore, they get some time on stage to promote their business. or they're, they're part of the good old boy club in the crypto space where these guys all know each other. They've been working together for the last 9 years, and they just circle jerk each other at these events. But one thing that I learned from listening to them was they weren't always correct. They were saying things that were not right, that didn't make any sense. And I'm looking at all the SEALs in the audience clapping their heads and nodding in agreement. Like they understood what they were saying. What they were saying was wrong. Then I start walking around to all the booths, and you see all these ideas, how the blockchain is going to change this. This company is going to utilize blockchain to do this and that, this and that. All great stuff. Some of it just kind of wildly out there. And they were all looking for like ICO status, looking for investors to back up their idea. Now, there's nothing wrong with this at all. This is how industries start. You have a whole bunch of crazy ideas and stuff that go out there. But I realized that most of them will never come to fruition. I said, I was telling some of our team there, probably more than 50% of these booths will not be here in 6 months. And I started asking questions to the people at the booth. Once you got them off their talking points, they were clueless. They had no idea what blockchain was, how it worked, proof of work, proof of stake. They were clueless. One girl even admitted, and I was messing with her on this too, because I never ask a question I don't already know the answer to in these type of settings. I just want to see what they say. And she started getting frustrated, and she's looking through her notes and pamphlets. And she says, I got to be honest with you. I'm only here because the CEO said I get a free trip to Europe, and all I had to do was read our talking points. and I just laughed. I ain't mad at her. She was just an employee, and most of the people at the booths they had no idea what's really going on. They're just trying to raise money. That's why education is so important. You've got to be educated on what's going on. And that education will allow you to find the diamonds in the rough, like the Amazons. And you understand that, right now, Bitcoin and crypto is overestimatedly hype. Long term, the impact is grossly underestimated because people haven't realized that this is the greatest invention in the history of mankind. People haven't realized it yet. It will disrupt every industry on the planet. All right, I'm getting off target. Let me continue. Bull still standing. Kerner is not alone in holding a bullish view of Bitcoin despite the prevailing bearish conditions. As CCN recently reported, the co-founder of Fundstrat Global Advisors, Tom Lee, still maintains that Bitcoin will hit the $15,000 price target by the end of this year. It may happen. Who knows? You don't know. Last year, it went from 5,000 to 19,500 in 5 weeks. It's possible. I doubt it. We are now approaching December. And because of this guy right here, if you haven't yet, I posted this video, Craig Wright. He is the reason, in my opinion, why the market has had a major correction right now. And the things he said in this video, he's on a mission to really drop Bitcoin all the way down to the 1,500 range, 1,500 to 2,000, because they're trying to starve out their competition. That's what they're doing here. The market there's not that much volume, so it's easy to manipulate. And when you've got 4 or 5 guys who were in at Bitcoin at the beginning, and Craig Wright, considers himself Satoshi Nakamoto, which can't be that far-fetched, only because, linguistic writers have said that Satoshi is probably either an individual or a group of people based out of the UK. And Craig Wright is British. He's a genius. He's also crazy. But you've got these 4 or 5 guys and then networks of miners that were here from the beginning that own most of the Bitcoin, having a private war with each other, trying to starve each other out, trying to make the other go bankrupt. That's what's going on here. And we are all collateral damage of this. So because of this unknown, nobody saw this coming. Everybody's projections for what's going to happen at the end of the year is off. That's why I don't see it going 15,000 by the end of the year. Hell, I don't see it getting 10,000 by the end of the year. Terming the recent market downturn an awkward transition, Lee is optimistic that institutional investors will embrace crypto in larger numbers once there is regulatory clarity. Yes and no. It almost reached $20,000 a coin without regulated clarity. This year, we've had nothing but good news in the crypto space all freaking year, and that didn't push the price up. That didn't end the bearish market. Stop dancing around the real issue, market manipulation. Another die-hard Bitcoin bull who has not wavered in the current bearish climate is the co-founder and CEO of Blockstream, Adam Beck. Earlier this week, Beck projected in a tweet that in the coming years, Bitcoin could be trading in the $250,000 to $500,000 range. I agree with that. He says, I consider 500,000 BTC plausible in the years ahead, from the digital gold, censor-resistant competitor, to physical gold and internet-native digital money. Yeah, I agree with that. We got to get over this hump that's taking place, this private war that's taking place right now. All right. U.S., Korea, China stock markets plummet. Is crypto correlated? Now, we saw a bunch of negative articles this week talking about the bubble pop. Bitcoin is dead and gone. But they didn't say the same thing about the stock market. So let's read on this. The crypto market is continuing to lose its value as the U.S., South Korea, and China demonstrate record high losses in their respective stock markets. As an alternative store of value, cryptocurrencies are considered as viable long-term investments, especially by millennials, in a period of global financial market instability and volatility. Millennials kind of get this. They get it. They're more open to it. It's the older generation that's trying to figure it out. And the ones that do, and they're not educated, they're looking at it as a get-rich thing, as a quick way to save them losing their 401ks and their savings. So they're just trying to get in on something that's going to give them some store of value. So at best, they buy and hold, but they have no understanding or education of what it's about. But however, recent weeks have shown that cryptocurrencies are still vulnerable to the weakening global economy, and the asset class is not able to perform as a hedge against uncertainties in the market. I don't agree with that. It's not that it's not able to perform, it's that it's not allowed to perform. See, I was taught as a lawyer, words matter here. There's a difference between not being able and not being allowed. A lack of correlation is not equivalent to an inverse correlation. Merely because an asset is not affected by a certain catalyst, which in the case of crypto could be the instability of the global market, it does not mean that the asset increases in value as a result. Historically, the crypto market has demonstrated a lack of correlation with the global stock market and traditional markets like equities. It has consistently recorded independent price movements regardless of how the financial market performs. You want to know why? I mean, this doesn't take rocket science to figure out. you're going to hear in the market a term called retail investors and, what's the other word they use? Institutional investors. Do you know what the difference is between those two words? Retail is code word for broke people. Institutional is code word for rich people. So, if Bitcoin has been dominated by retail, aka broke people investing, and it's no surprise that it is, there's no barrier of entry to crypto. You can get in with $5 to your name. I did. I got in at $30. Everything I have right now came from that $30. I can't get into the stock market for $30 and flip it. It's not going to happen unless I got in at the beginning of the first industrial revolution. So you have a bunch of retail broke people investors in crypto who don't have any investments in the stock market. So it doesn't matter what the stock market does. It doesn't affect all the broke people. They're not in it anyway. So that's what he says here. Historically, the crypto market has demonstrated a lack of correlation with the global stock market and traditional markets like equities. It has consistently recorded independent price movements because it is independent, regardless of how the financial market performs. Over the past several weeks, as investors began to head towards the exit of stock markets, fearing a further drop in U.S. stocks, the price of major currencies like Bitcoin and Ethereum plunged by more than 35%. Well, that's only half true. Well, let me rephrase that. That is true. The why is only half true. Yeah, one issue could be the stock market, but overwhelming evidence points to the Bitcoin Cash hard fork and the infighting between the Roger Ver crowd, the Craig Wright group, and the biggest miners in the world. That's more likely. So yeah, could it have had an impact? Yes, but it is not the factor. The U.S. stock market is experiencing one of its worst sell-offs in history. Stop right there. The other day I read about Forbes, MSNBC, and Bloomberg all bashing the crypto market correction, yet the stock market had one of its worst sell-offs in history. And a trade war between the U.S. and China has led to a decline in the valuation of the Chinese stock market. Did Bloomberg or Forbes say, oh, wow, the stock market is a scam? We're having the biggest crash in the history. The biggest sell-off in history is happening right now. It's a scam, y'all. The stock market bubble has popped. Are they saying that? No. They didn't even mention it. The weakening U.S. and Chinese markets directly affected the economy of South Korea, which was already in decline due to the country's struggling growth rate. The KOSPI fell by 1.2% in the past 2 days, and investors generally expect the instability of U.S. and Chinese markets to be sustained. Alvin Chang, Associate Director for Prudential Brokerage, told SCMP, there is a lot of negative news about the U.S. criticizing China before Trump and Xi meet next week, and that has dented sentiment. The mixed messages could be the U.S. trying to win some bargaining chips for the upcoming meeting. Investors are on the sidelines closely watching to see if the meeting will yield any concrete results. The trend of the global market is gearing towards the elimination of high-risk stocks, equities, bonds, and assets, which includes crypto. The short-term price drop of the market was triggered by the infighting of Bitcoin Cash and Bitcoin Cash SV. There you go. But the crippling global economy is said to be one of the major catalysts of the declining momentum of cryptocurrencies. I'm not willing to give them that one yet. Crypto could become a store of value like gold, that is used by investors to hedge against the global economy. However, due to a lack of liquidity and infrastructure for retail traders, cryptocurrencies are not capable of operating as a hedging tool for large-scale investors. Stop right there. 2018 has been a bearish year, brought on purposefully. During this bearish time, all of the investors, the banks, the governments have been building infrastructure to prepare for another run. So in part, this statement is true. Lack of liquidity and infrastructure. That is what's been building all year long. And the price has been artificially held down so that they can hoard more coins and ride the rocket when it comes back up. Now, as far as hedging against the global economy, they first need to be in this space to do so. They're not. Those so-called institutional investors are not in crypto yet. So when the stock market spooks them, they're not running to crypto yet. They're still doing gold and precious metals and art and real estate. That's what they know. But let the crypto market get back into the trillions of dollars crypto market cap, and you'll see a difference. As the market develops and the industry grows, better liquidity products will become available for both institutional, there's the word there, you see that? Institutional and retail investors. Code word. You guys should know this by now. Anytime you see that, institutional means rich people. Retail means broke people. Only then crypto could potentially work as an inversely correlated asset to the global financial markets. All right, let's go on to the last article for today, or this morning. I'll see how I feel. I have been sick the last couple of days, lost my voice, so we'll see. I may come back tonight. Trying to start a Bitcoin business in this market climate sucks, says Michael Novogratz. Now, Michael, here's a guy who is not fazed about the current price of Bitcoin. Here's a guy who put his money where his mouth is, started his own freaking crypto bank and business that lost over $100 million in the first quarter of 2018, and he was actually excited. He's like, I'm just glad, I'm in the game. This is a guy that will become one of the world's richest men in the next 5 to 10 years. He's already a billionaire. But there's a difference. There's Jeff Bezos, billionaire, and there's Donald Trump, billionaire. Donald Trump is a poor man next to Jeff Bezos. There's a difference. Both billionaires. Crypto investor Mike Novogratz has expressed dissatisfaction with the level of difficulty involved in trying to build a cryptocurrency business amidst a persistent bear market, even as he remains bullish on the prospect of his company in the wider crypto space in the long term. Speaking to the Financial Times, the former Goldman Sachs partner and founder of Galaxy Digital revealed that the company, which was set up to act as a crypto merchant bank, has to contend with a unique set of challenges when compared to traditional merchant banking. Launched in 2017, Galaxy Digital received some $302 million in investment from Novogratz. He put $300 million of his own money into this. And it currently manages about $460 million in assets across 3 offices in London, Hong Kong, and Tokyo. After setting up a trading arm recently, the company is also looking to raise funding and improve its profile with a dual listing in Frankfurt. A look below the surface, however, reveals an altogether different reality, with the company's shares having dropped a massive 37% since its August debut on the Toronto Venture Exchange in a listing that raised $242 million. It also recorded losses of $134 million in first quarter 2018 due to unrealized losses of $85 million on digital assets and trading losses of $13.5 million. Second quarter did, however, produce better results, with $35 million in net income driven by $44.8 million in unrealized gains from principal investments. It also managed to cut its trading losses down to $1.4 million. Speaking to FT about his thoughts on the situation, Novogratz said, 2017 was just fun. It was almost stupid. I agree. But this year has been challenging. It sucks to build a business in a bear market. Staff anxiety levels go up when crypto goes down. In most traditional businesses, such as Goldman Sachs, you don't worry. There's not an existential threat out there. Known for making consistently bullish predictions about the price of Bitcoin, Novogratz is reportedly navigating a mini crisis at Galaxy Digital, which earlier this month announced the departure of company president Richard Tavoso and co-head of trading David Namdar, citing a pivot away from consulting for smaller startups to working with large institutional clients. FT sources claim that the company's advisory business has received a subpoena. I didn't know this. From U.S. regulators, but this has not been confirmed by Galaxy. On his part, Novogratz continues to make bold predictions about the future of cryptocurrencies, predicting that 2019 will see institutional, rich people, investors move away from investing in crypto funds to crypto assets directly before the end of the first quarter. All this is telling me, in layman's terms, because I don't sweat things that I cannot control, is that we still have a window of opportunity to build up our crypto portfolio before things start to really go crazy next year. I predicted next year is going to be the crypto wars in most industries, like the phone industry. You saw my Facebook Live yesterday. The cell phone industry wars are coming back. Excuse me. Remember the old days of AT&T and Sprint, T-Mobile and Verizon duking it out? You know, 3 out of 5 commercials was a cell phone commercial. Now you enter Microsoft and the Android phones, the Apple phones, the Google phones. You haven't seen nothing yet. The blockchain is revolutionizing not only the technology that phones are going to be able to do. Because, I mean, what's the major difference between the iPhone 9 and the iPhone 10? What, better screen size or a better camera to take selfies with? No, this new technology is going to completely revolutionize how we even use our phones. And everybody's going to want to get in on the game. It ain't going to be about your cell phone bills anymore. These companies will actually pay you to use a phone. Ooh, how many of you like that concept? Getting paid to talk on the phone. Getting paid to use data. How about your phone mining coins on you just because you have it on? You haven't seen nothing yet. And that's going to be the same way in most industries that the blockchain is going to disrupt next year. And then you got JP Morgan that predicts an 80% chance that the United States economy will go into a recession bigger than in 2008 in the next 3 years. 3 years from now is 2022. Are you prepared? Are you prepared? That's why we have KGX. All right, that is it for Crypto Talk for today. Maybe I'll come back tonight. We'll see how the news is and how I feel. And then next week, those of you that's going to be in Santa Clara, please let me know as well. And we can organize a hookup, meet up, or whatever. But that will be my last week of vacation. And when I come back from Santa Clara, and starting December 1st, I cannot wait anymore. I don't care what's available and what's not. I'm putting my foot on the gas. Coming out of, what is that? Cruise control, and going for it. That's going to be the march to Bitcoin billionaire status. Some of you are going to get left behind. That's your choice. I'm just telling you what I'm going to do. It doesn't matter what everybody else is doing. It's going to be an overdrive. 2019 is going to be the year most of you will remember for the rest of your lives, based on the decisions and the actions that you take today. And thank you, Bouger, and anybody else that also appreciates me sharing my thoughts when I read articles like this, because I don't just read the article. I give my opinion on it as well and my insight. Make sure you hit that thumbs up button, because I am even thinking about how I'm going to be changing up my platform on doing 2 crypto talks a day. I'll be heavily thinking about that December going into 2019, about how I'm spending my time. So with that, you guys have a great day. Enjoy the rest of your holiday weekend. Eat all that turkey for breakfast, turkey for lunch, turkey for dinner, turkey for snacks. I'm about to have me a turkey sandwich for lunch. Wait, it's not even 10 o'clock yet. So you guys have a great day. I will see you all later. God bless. Bye-bye.